Alrighty, good morning, everybody. It is Monday, May 16th, 2022, and we're going to go ahead and get started on our pre-market analysis here for the S&P 500 futures market. We're going to go ahead and jump up to the higher time frames like we do on Monday and just take a look up on our annual chart here. Remember, 4201 was 50% of last year, and we've gone ahead and ducked way below, almost came down to the lows of last year. So just want to mention that up on our annual point of view up there, and on our quarterly chart, not really much else to notice other than we're obviously getting a really big correction here. If we look at the retracement from the COVID correction low all the way up to the all-time high, I think I mentioned this last week and maybe even the week before, we still have plenty of room down below to come check. So if the market continues to sell off, 38% retracement of that leg is down at 37.70, 50% down at 34.51, and the 61.8 all the way down at 31.30. And who knows? Who knows how far we're going to go here? So that's really all I wanted to mention from up here on the quarterly chart. I just want to point this out. This should not really indicate anything unless we start to see other things start to build up on other time frames. But if you look from the low of the COVID correction up to the low that we've made here on our current correction, we do have the start on this quarterly chart of the argument for a bullish divergence for whatever it's worth. Remember that we could still break down lower and come all the way down to the low from the COVID correction and test it, and we would still, assuming we were in a situation like this on RVI, still have that signal. So plenty of room for this to still go. So that's why we need other time frames and other information before we ever start hanging our hats on what we're seeing here on the quarterly chart. So I'm just mentioning it, something to kind of watch. Let's come down to our monthly chart. Monthly chart, really not much to really notice here. Same retracement scheme. If the bar closed the way it looks right now, it's technically somewhat of an ambivalent but bearish looking bar. So not really much to say here on our monthly. And then down on the weekly here, I think we talked about this last week on our daily. If you look at the daily from May 12th, we did have what looked to be a potential reversal bar, and we even talked about that going into Friday. So we looked at Thursday's bar, looked like a potential rotation or indication of a turn, and we did, sure enough, break the high of Thursday's high and attempt to come chug higher here on Friday. So there's that. But if you look on the weekly, we also said we saw it, this huge wick to the downside, and I mentioned if we end up closing up here, we would have the first clue from the higher time frames for a potential rotation based on the candlestick, and more importantly, the candle wick down to the downside there. So for whatever it's worth, we do still see that on the weekly. And then again, down on the daily, back from the May 12th, we do have beautiful, basically a doji. So looks like we're attempting to continue to push here this morning in the overnight session. We did push just a little bit higher here, and I do want to mention where we found resistance in the overnight market, and it was right off of 40.42 to the tick. So remember, our minor eye level at 40.42 has been working really nicely. In fact, if we go back, there were some beautiful tests of it throughout last week. And then as you can see here in the overnight session, the high from Friday of last week was 40.36. We pulled back, bounced out at the end of the day there. And then in our overnight session, when Globex opened on Sunday, yesterday, we pushed up right to 40.42 there to the tick. And now we're pulling back. Let's see, on the 4-hour, don't think there's really much to mention. I do want to point out that the same retracement levels that we talked about last week over here at just about 40.25, just about 40.77, and just about 41.33 right there. Those retracements from that we had on the chart Friday are still valid today. It's the same exact. If we look at this push down from 43.03 all the way down to the low at 38.55, those are the 38, 50, and 61 levels. So those are up on there. And notice that we came into the 38 here on Friday and kind of peeked through it and failed. And then here in the overnight session, again, peeked through up to 40, 42 and got that pullback here. And now we even technically, if the candle closed the way it looks right now, the most recent 4-hour candle we're looking at, we would technically have a bearish divergence looking at that peak right there. So for whatever that's worth, this still has plenty of time. This will be still playing out when the market opens here and won't close until 30 minutes after the open. So this whole picture right here, in fact, I got to remove that arrow because it's not an official signal just yet, but that might play out if we don't break that high right there. And this RVI closes up here. So let's get down into the rest of our levels coming into this new week here. Also kind of interesting to note, we failed from 40.42 in the overnight session, pulled back, bounced, and just failed from the 38% retracement of the whole sell-off that we were just looking at. We failed off that level to the tick. Again, I don't know if that's just coincidence or not, but just held it. I'm just noticing that right now. So let's look at the levels we have for this morning. And it is a little bit messy on the pullback here, but we do want to consider the potential retracement levels of this bounce from the low, I believe back from Thursday at 38.55 all the way up to the push to the high of the overnight session here at 40.42. So when you throw the fib up, you get yourself 3 levels. The first level being right here at 39.70 or whatever it is, 70.50, 70 quarter there. A little bit lower, the 50% retrace is right inside of this area between 39.45 and 39.50. That's why I have that shaded right there. Again, we have the 50% retrace right inside there, right in between 39.45 and 39.50. And then a little bit further down from there, the 61.8 is sitting here at 39.26. Let me get the number, 26.50. And I meant to shade this in. We have 26.50 right up to this swing high here at 39.30 even. So let's see if I can get this on, 26.50 to 30. And bring it out here. Get it on all the charts. So we got that. And then as far as major swings that we're pulling back into here, we do have this swing from Thursday. Basically, it looks like the high of Thursday there at 39.61.75. If we notice, on Friday, we broke through that level and actually held it a bunch of times. And then once we launched out of there and pulled back, it basically came right to it and bounced out there. I still think that's a valid level since we've now really gotten far away. When we come back, it wouldn't be surprising if there's something going on right there. And then again, a little bit further down this swing here from the end of the day on Thursday where it pushed up and then failed and then broke through and hasn't come back to. And that is 39.30. So those are the levels you see all below us here, below the overnight low, which happens to be here at 39.81.75. So if the bears hold where we're holding right now, get down through the orange power level, and come on down to break the overnight low, the first area that we're going to be pulling back into is 50% of the day before, and that first 38% retracement between 39.70 and 39.75. If that doesn't hold and the bears continue to sell off, we'll be contending with that major swing that did act as a really good support all throughout Friday's session there. That still, I believe, would be in play this morning at 61, 61.75 there. And then if that breaks, we're down into, like I said, 45 to 50, 39.45 to 39.50, which is also the 50% retracement of the whole push up. Of course, 39.40 is there, so can't really ignore that, but a little less significant this morning. And then down into the 61.8 retracement, 26.50 to just about 39.30, the swing high. And then the low of Friday is our major eye level at 39.14.50. So these are the major pockets and areas I would expect there to be some type of support. And a little bit further down, if we do break through the low of Friday, we're going to come back into 38.90 and then down to the low of last week was 38.55. Any further from there, probably don't have to talk about it. It's all the same levels we've been watching and talking about all of last week. So if you want to know what these levels are, just go back to one of our pre-markets from last week, and I spent time listing out all the major and minor eye levels we're going to be pulling back into. On the other side of things here, if the bulls end up finding some support and gaining strength and they start to push this morning, first things first, they're going to have to get and stay above the orange power level, get up through the close of Friday, and get through the high of last week, or the high of Friday, and then up through 40.42, the high of the overnight session. From there, we'll start talking about what we're going to be ripping up into, and that would be this major swing that I still think is valid, even though we did kind of cut through it up here at 40.55, maybe 40.55.75, and then we're up to the same retracement levels that we talked about on Friday. So basically 40.79 to 40.80. We've got a major swing here at 40.99.25, and then we have a minor level at 41.08.50, and then the 61.8 retracement up here at 41.32. Again, these are the same levels from Friday, so you should have them on your chart. And then we're up to the major eye level at 41.42.25. Any further from there, if the bulls continue to rip, I'm still looking at the major eye level at 4,200. And then that same pocket here between 42.40 and 43 and 42.56 and 42.61. Is there anything giving me a clue for a bullish breakout right now to come up and actually get all the way to 4,200 and beyond? No, I don't expect there to be a major bullish breakout, but you never know what's going to happen in the market. So just beware of those pockets up above. And I think that basically covers it for the beginning of the week here. Don't think there's really much else to add to the picture. Let's see here. Looking at the highs right now, I'm just looking to see, do we have some type of major bearish divergence setting up from the high of the overnight session or from the high of Friday? I don't see it here on the daily. I don't see anything on the, well, actually the 4-hour does have a little bit of a bearish clue from the highs. And the 60-minute does also. So with a 4-hour and a 60-minute signal from the overnight high at 40.42, that's a pretty strong intraday intraday signal. So if we can't get through the overnight high, and especially through this little peak up into the 38 retrace here at 40.25, then my expectation would be for an attempt to push lower here just from that confluence of bearish signals. Doesn't mean it has to happen, but that's what that would say. And then I'm kind of noticing here, not only the 4-hour, but the hourly, this major wick up right into that 38 retrace and failure also looks pretty bearish to me. So if they do end up getting through that wick there and get through the overnight high, then that's a negation of the bearish signal. The other thing that I always have to say, you never know if it's going to be a peak above and fail. So even though we do have a nice clear bearish signal from up here and we would expect this to break lower, like hold here and continue to go, doesn't mean that out of the open, the market doesn't come up and start to rip right through that bearish signal and then come up just a little bit further. And then from there, we start failing and going lower. We've seen it happen. I feel like it's Groundhog's Day. I mentioned this because for weeks and weeks now, that's all we've seen. Our bullish breakouts, or at least what looks to be a bullish breakout out through the previous high that we're dealing with. And then all of a sudden, next thing you know, it's chugging right back down to the lows of the move. So I'm not saying that if this high breaks that it's a guarantee for a chug higher. It could be a fake out like we've seen for weeks now, and then it brings us lower. So that's what we got coming into the open here on Monday. So for everybody watching out on YouTube, have a great morning. We'll see you tomorrow. All right, guys. So that's what we're dealing with this morning. Coming down to the short time frames, we'll look at that. We just missed a bounce right off the holy orange power level and a rejection from the fast moving average. So